Hi friends, welcome back to Stockwood channel. Avenue Supermark, which is popularly known by its name DMART, was listed in the stock market in the year 2017. It was listed in the Indian stock market at a price of around 600 in April 2017, and thereafter it has given a huge rally for the investors and reached the level of 5,000, and at the current valuation of around 3,500, it has given almost a 6x returns to its investors. That is, an investor who had invested 1 lakh in 2017 would be sitting at a profit of around 5 lakhs today. But in the recent time, that is from November 2021, the stock has corrected from its lifetime high of around 5,000 and currently trading at around 3,500. So in this video, I'll be talking about the business overview of DMART, the financial position and the current valuation, and also at the end of this video I'll be giving my opinion about the stock in the short term and long term. If you derive any value from this video, a humble request from my side to like the video and also subscribe to my channel. It means a lot to me. And also in the recent past, I have made many videos regarding Dixon Technologies, Gland Pharma, Tata Motors, and chemical stocks. Do watch out for these videos in the channel. So without much delay, let's get started in this video. To understand the business overview of DMART, let us look into this document of DMART. So DMART is basically a chain of supermarkets spread across India. It follows the everyday low cost and everyday low price. That is, it procures products at a low cost and sells it to the end customers at a very low price. So this has been the model of success for DMART. About its business verticals, the main revenue comes from its brick and mortar business. That is, the huge stores that it operates across India. The second vertical of DMART is DMART Ready. That is the e-commerce business of DMART. To counter the challenges posted by companies like Amazon and Flipkart, it has started its own e-commerce business and started operating in around 22 cities currently, and this number is going to increase in the coming days. And also recently it has also entered into the pharma business, which is a high margin business. It has started only as a pilot project in one of its regions, that is Mumbai, by starting its first pharma shop within its outlet. To further understand about its revenue mix, I am into the annual report of DMART for FY23. In FY23, 56% of its revenue is achieved from the food business, that is the groceries and dairies and other staple food that it sells in its outlet, and around 20.9% is from the non-food business, that is the FMCG business. And apart from that, also 23% of its revenue is derived from the general merchandise and apparels that it sells in its outlet. This being a high margin category for DMART, the improvement in the revenue of this category will actually translate into higher margins for DMART. Also for investors, this is a very important slide to see how the expansion of DMART is happening across the country. In 2011-12, it was operating only around 55 stores and operating only in around 4 states, and currently it has around 324 stores across 10 plus states in India. So going forward, as it increases its number of stores within these regions, it also has a potential to increase in the non-existing regions like in the eastern and the northern sectors of India. This slide also gives a very good view about how much stores it has been adding over the last couple of years. So in this current year, that is FY23, it has added almost 40 more stores to increase its total number of operating stores to 324. Coming to the financials of DMART, it has increased its revenue exponentially over the last 5 years. That is, it was around 19,000 crores in FY19, that has increased to 41,000 crores in FY23. And also it is doing the business at a good EBITDA and EBITDA margin, with its EBITDA reaching almost a lifetime high of around 3,659 crores and with the EBITDA margin of 8.7. Also, the PAT also has shown a positive trend with the net cash flow at around 3,100 crores. Finally, with all this information, the investors would be wondering if such a fundamentally strong stock has performed well both in revenue and in the overall profit. Why has the stock price fallen by around 30% in the recent time? The answer to that lies in the valuation of this company. If you see the PE ratio of this company, it had reached a levels of around 300 PE in October 21, which was a very high valuation for this kind of company. But ever since that, from October 21, the price of DMART has corrected by around 30% and currently trading at around 3,500, which comes to a PE ratio of around 95. Given that DMART had always commanded a high PE, it is currently trading below its 5-year median of 125 to the PE ratio of 95. Since we don't have a equivalent company of a similar range in the Indian market to compare its valuation with an Indian peer, it will be difficult. So for this purpose, I have compared it to the international peers like Walmart and Costco. If you see the PE ratios of these companies like Walmart and Costco, it is around 33.9 and 36.6, which is significantly lower than DMART. Not only the PE ratio, the price to sales ratio of Walmart and Costco is also comparatively low to that of DMART. But it is not only the valuations in terms of PE and PS, we should also see the margins at which these companies are operating. If you see, DMART is operating at a much better operating margins of around 8% compared to Walmart and Costco, which is in the range of around 3. So this gives a view that the operating margins of DMART is high, and that is why P ratios of DMART is also higher compared to its international peers. Not only the operating margins, in my view, the growth perspective of DMART is also higher than that of Walmart and Costco, since DMART is still a growing company. If the information shared in the video is useful, humble request to hit the like button and subscribe to the channel. It motivates me to come with more such videos and help the YouTube algorithm. About my view about DMART, I've already covered that the valuation of this company is pretty high, that is around 95.4. A fair value of this stock would be around 85 to 80, even considering that it is operating at a good operating margin. The other positives of DMART is it is backed by a very good in promoter, that is Radhakishan Damani, and also the promoters have a good stake in this company. Given that India is a growing economy and a lot of urbanization is going to happen in the next 5 to 6 years, and also the income levels of the Indians would improve in the coming days, companies like DMART will benefit in the long term. So finally, long-term investors can hold on to this stock as this is a fundamentally strong stock and currently trading below its 200 DEMA. You can always see that whenever the stock has been trading at the levels of 200 DEMA or below the 200-day DEMA, it has given a sharp correction after that. But given the current conditions about valuation, there might be short-term correction further in this stock, but on a long term, this is a stock to hold for good returns. Hope you like this video. Please subscribe to my channel. I'll see you in the next video. Thank you.